If technicals were the most important thing in trading, then why aren't the best technicians the best traders? And we'll go to the charts to look at the Russell 2000. Let me take you to this week's NinjaTrader Charting Edge. This week we pulled up the E-mini Russell 2000 future symbol RTY on a weekly chart. Everybody's talking about the Russell 2000 right now. As you know, this is a market that I regularly trade with my swing positions. Few things really keeping my eye on the Russell right now. No positions as of yet, but here's what I'll be looking for. First, you know I like to see when markets close, dailies or weeklies, in a Bollinger Band mouth that's opening up. If you go back to last November, actually a year ago this month, we had a close on a weekly basis with the mouth of the Bollinger Band opening up, and I was looking at a potential target of roughly 2250-ish here in the Russell. You know I like the peaks of the Bollinger Bands as potential targets, and we had a multi-week rally in the Russell 2000. They called it the November to Remember because that sparked that huge rally in the Russell, holding above the 10-week moving averages all the way up to the point where they got that peak. And as you can see now, we've been in a consolidation for many months. Haven't done really any trades in the Russell this year. But now what are we looking for? I think we could be looking for a similar situation that we saw last November. If the mouth of that Bollinger Band starts to open up here on a weekly, we get a weekly close like that, I'd be looking for a target, which would be this peak right here, just below 2,700 in the Russell. And who knows, you could be seeing a multi-week rally just like we saw last November. Now, where am I wrong? If we get a weekly close below the 10 or 20-week moving average, then I know that I'm wrong. No longer looking for swing positions. I wanted to go to the weekly this week on NinjaTrader Charting Edge because I wanted to have that bigger picture perspective. And right now, if we see something very similar to this happen there, we could be in store for many weeks of rally in the Russell 2000. In my intro, I mentioned why aren't the best technicians the best traders? I put this tweet out the other day. Why aren't the best technicians the best traders? It's because technicals are just a tool. They don't guarantee results. How you execute is what matters. Average technical analysis skills with great execution is more profitable than great technical analysis with poor execution. Let's go back to that Russell weekly chart. So each and every week in the NinjaTrader Charting Edge, I go over scenarios that I'm looking at on a technical basis to give me a bias of direction. I've talked about this specifically as red light, yellow light, or green light. Red light in a direction long or short, neutral, or green light in a direction long or short. What I'd be looking for here in the Russell 2000, as I mentioned in the NinjaTrader Charting Edge, was a green light long if X happens. We're not quite there yet, but if it does happen, I'm a green light long. So I know in my technical analysis what I'm looking for, but that doesn't guarantee if I get long, I'm going to make money. A lot could happen between here and getting to my potential target. I've talked about this before in previous episodes to where I'm wrong is much more important than what my target is. Why? Because look at this move back here in November in the Russell 2000. There was a lot of volatility. It sure looks clean on the charts, and anybody could show you something that worked back then. But I could tell you as someone who traded it, it was not that easy. I knew to stay green light long the whole time, but a lot of up and down and a lot of volatility along the way really made that difficult to make money, even though I was right. The technicals told me what potentially could happen, but that did not guarantee that I was going to make money. Same as we are here right now. I want to actually go to a daily chart now and show you my process and how I use the technicals to help me, but they don't guarantee what the result will be. A big part of my strategy is just, like I mentioned, red light, green light, yellow light. And if I get a green light on the bigger picture chart, which is why I went over the weekly this week, I then take it down in time frame to a daily. What does the daily look like? Does the daily confirm what the weekly is seeing? And as you can see here, the mouth of that Bollinger Band is opening up. So my process will be, okay, where's the best time frame for me to manage risk once I get that confirmation on the weekly? I look at the daily and say, okay, we're opening up the mouth of the Bollinger Band. We've gotten multiple daily closes. Where would the targets be? I look at the peaks right above 2,400, 2,420-ish area. Where would I be wrong in that position? Actually, the risk is somewhat minimal here versus the reward. Roughly 2360 as we're recording right now, putting a stop below probably 2281, as you can see, pretty much a double bottom here in the daily, and lifted off from there. So I know that the 20 period moving average is a good place to lean on. So I look at the risk versus reward and I say 2360 versus 2280, about 80 points. When you look at the target, 2420 to 2440-ish, it's about 1-to-1. Once again, it's not about the technicals that are going to guarantee a result. It's about how I'm going to execute it. If I execute here, I pretty much have almost 1-to-1, maybe even a little bit less, depending on where I get in. So in my mind, what I want to look for is the pullbacks. Maybe I'll go to a shorter time frame to see if I could get in as close to these moving averages as possible to get the most out of that position. Actually, let's go to a 60-minute chart now. As you can see here, the 60-minute chart looks almost like that weekly chart did for a period of time with that consolidation. So the 60-minute is not giving me a ton right now. I'm looking at the 10 and 20 simple moving averages on this time frame as well. Really, the market's just bunched up. What will I look for? If we start to open up that mouth of the Bollinger Band, very similar to what we saw here, that would give me additional confirmation on multiple time frames that I'd want to step in using the 60-minute chart. And maybe during that time frame, I'll use these 10 and 20 period moving averages on the 60-minute. Now, the art of trading comes down to you have this big picture look on the weekly. Then you look at the daily and say, look at my first target in the daily is roughly 1-to-1 here. Then you go to the 60-minute chart and say, you know what? It's not giving me a ton here for my entry, even though I do believe that the market is probably going to rally from here. How do I best manage my risk? And you have to wait for that same setup to occur here to where you can now use this area as an area to lean on to help guide you for that bigger picture weekly chart. This is why I say the best technicians may tell you where they think a market may go, but as traders, that doesn't guarantee that we'll still make money. There's a lot of movement in here along the way to manage our risk to get the most out of that rally. We can't just buy and let it go. We have to know where we're wrong along the way. I'm even going to go down to a 30-minute chart to see what that looks like. What we see here is very similar to what we're seeing on the 60-minute. So now we have our weekly chart where we have the potential for that big move higher. The daily is indicating a potential test of 2420 to 2440 with about 80 points of risk versus reward. So just about 1-to-1. Then you go to the 60-minute, not giving you a ton. Then you go down to the 30-minute, which is about as low as I'll go for a swing position, and it's not giving you a ton. But what I like about the 30-minute right now is the consolidation looks very similar to the 60-minute. If we start to get that trigger where the mouth of that Bollinger Band opens, I might be able to start inching my way into a position. Once again, this is where the art of trading comes along the way, where you have to have your bigger picture ideas and thoughts about what the market may do. Then you get down to these shorter time frames, and I like to use simple moving averages and, of course, Bollinger Bands to help me manage risk in that direction. And part of my thinking will be when I see my shortest time frame in the 30-minute chart start to trigger a possible entry where the mouth of that Bollinger Band opens up and we start to hug it, I'll start inching my way into a position. So the key is to have that bigger picture bias and narrow it down to the shorter time frame to be able to manage your risk as good as possible. What I'll also look for as a possible entry is if you see this bottom peak right here, I always say peaks are targets. They could also be entries. If we start to see the market spike down here in the Russell, right here, this peak would come in roughly right around 2345, we'll call it. Well, that's still in play for me to get in on my daily. So maybe I don't get a trigger entry long when the mouth of that Bollinger Band opens up. Maybe I get a pullback down to one of these peaks on my time frames, and I step in there, and then I use the daily moving averages as my stops. So you see, this is why the best technicians aren't the best traders. There's a lot that's going on in all of these different charts for me to choose where I'm going to get in. I know where I'm going to get out. I know where I'm wrong. I don't want to see something on the weekly chart close below the 10 or 20-week moving averages. I don't want to see on the daily chart get below the 10 or 20-day simple moving averages. But along the way, I don't want to just be taking on risk and just be holding a position because I think the market's going to do something. I have to have conviction in where I'm wrong, and I have to find these technical tools to help me get in. Remember, traders, technicals are just a tool. They don't guarantee results. Sure, I see the possibility of a massive move in the Russell 2000 to the upside. That doesn't guarantee I'm going to make money. There's a lot that happens in between the lines, we'll call it. How you execute is what matters. That's why I say average technical analysis skills with great execution is more profitable than great technical analysis with poor execution. Because you see something happening on a weekly or a daily that has massive potential does not guarantee results. It comes down to how you manage your risk and how you execute that trade. Remember, traders, micro treasury yield futures are now live at CME Group. Pull up these symbols so you know what the yields are doing. 2YY, 5YY, 10Y, and 30Y. To learn more, go to cmegroup.com. Final thoughts for today, traders. The message I'm trying to get across to you is that you could do all the technical analysis you want. You could know exactly what you think is going to happen in a market. You could have great targets, but it really comes down to the execution. There's so much that happens before a market gets to a potential target that it really comes down to you as a trader and how you execute. That's why the best technicians aren't the best traders. The best traders are the ones who are the best executors of their strategy. Now, I put this tweet out the other day. Are you confident in your trading decisions? That's what all of my technical analysis is really based on. Am I confident in the direction I'm looking at? When I look at the Russell, I talked about so many things that could happen on a weekly to a daily, the 30-minute, the 60-minute chart. I'm confident in my direction. So therefore, when I go forward and execute my trades, I am confident in the direction. So I'm going to be confident when I get out of a losing trade. Because if you aren't, you'll have a weak hand in the market and your win probability decreases before you get in. Because if I go into the Russell, and let's just say I get a short setup on maybe a 60-minute chart or a 30-minute chart, when my dailies and weeklies are bullish, I now have a weak hand. I'm not confident in that because I know in the back of my mind that bigger picture setup is possibly happening. So why would I want to fade it? A lot of traders will do all that work, be confident in the big picture trend, and then go against it. And then they have a weak hand in the market. If you're confident, your win probability increases even if the trade idea is wrong. Why? Because if I'm wrong, I'm confident when I get out. If you have a weak hand in the market, that's when traders add the losers and they do all sorts of things that create bad habits. Executing with confidence is an edge. If you enjoyed today's episode, give us the thumbs up. If you didn't, give us the thumbs down and tell us why in the comments down below. Never miss an episode of Develop Your Edge. Hit that subscribe button. If you want to message me, you can DM me on Twitter at Anthony Crudele. And don't forget to check out Instagram, Anthony C. Crudele. That's a wrap for today. See you next week.